Hello, everyone. Thanks for joining us today for SC&H Group's webinar on the roadmap to a world-class financial close. I'm Colin Kendall, and I'll be your moderator for today. Before we get started, I'd like to share some key housekeeping items for today's presentation. All attendees will be on mute during the webinar. Please feel free to ask questions throughout the webinar via the Questions tab located at the top right of your screen. We'd love to hear from you. We'll dedicate the last 10 minutes of our time today to get through as many questions as possible. If we do not get to your question during today's webinar, Kevin will email you a response in the coming days. If you'd like to revisit the webinar, a recorded version will be available to you. We will send that out via email over the next couple days. If you need any further information or have any additional questions, please feel free to contact Kevin directly. We'll provide his contact information on the final slide of the presentation. To lead today's webinar, we are joined by Kevin Hebel, Principal here at SC&H Group. And without any further ado, over to you, Kevin.
All right, awesome. Thank you, Colin. So just to provide a little bit more background, as Colin mentioned, I'm a principal at SC&H. I've been working in the financial close space for about the last 14 years and with Oracle products throughout that time. First as an end user of PeopleSoft, of Hyperion Financial Management, and of Hyperion Planning. And then for the last 7 years in my role at SC&H Group. So for the program today, we're going to start by jumping into some of the keys to a world-class financial close. We'll talk about challenges that organizations face on a regular basis with the close process. And then we'll talk specifically about Thayer. Thayer Lodging is a client of ours who went through an implementation of Oracle ERP Cloud Financials and Oracle FCCS, or Financial Consolidation and Close Cloud Service, and completely changed their close for their organization. So we're going to talk about them in detail and some of the outcomes and lessons learned from that project. Before I get started with the Thayer story and about more discussions on a world-class close, I do want to share with you a little bit about my company, SC&H Group. I work with our business performance management practice. We specialize in Oracle Hyperion EPM and BI consulting services. We are an Oracle Platinum partner and an Oracle Cloud Select partner. We've been a Cloud Select partner for the last 2 years, and we're actually the only company, the only Oracle EPM partner to be a Cloud Select partner for 2 years in a row. It's a new designation that is specific for partners that have a lot of experience in the Oracle Cloud space. Our group's been working with Oracle EPM products for over 17 years. Our company has 300 employees, and we are the largest dedicated Oracle EPM partner on the East Coast. And most importantly, we do have a 100% successful track record on our client engagements. Our recent success stories include clients like Newell Brands, Hilton Worldwide, Hertz, and Chewy.com. And in 2016, in addition to the first go live of FCCS, which is the story we're going to be talking about today with Thayer Lodging, our team deployed PBCS, which is Oracle's planning and budgeting cloud service, to over 2,500 users at Hilton Worldwide, and that represents the largest deployment of EPM Cloud in Oracle's history. All right, so now I'm going to jump into a little bit more of the content, and we're going to start by talking about really a world-class close, but more specifically, some of the challenges that organizations face every day with their close process. All right, so how are you keeping up? How is your company keeping up with complex business requirements, with complex reporting requirements? More than 70% of companies have more than 5 reporting standards. Thayer certainly fits into this category, and we'll talk about this a little bit later during the presentation, but they have local reporting requirements, US GAAP reporting requirements. They also report in IFRS for holding company and for other international standards. So they have a number of reporting standards. And 50% of companies have increased staff in the last 3 years to keep up with these requirements. So there's a lot of challenges around the reporting standards and making sure that you can keep up with how that landscape is changing on a consistent basis. In a 2016 survey, it was determined that 86% of companies use Excel or email to track the close. So if you think about that extended close process from the subsidiary ledger closes to the general ledger, data assurance, your consolidations, your internal and external reporting, all the way through to the filing, there's hundreds of resources, potentially, even thousands of tasks, and all of them are critically important, but 86% of companies are still using Excel and email to understand where they stand with their financial close process. As a result, 68% say they have inadequate visibility across the close. Another statistic that I thought was really telling from the survey is that 25% say that they effectively and efficiently produce corporate reports. So only 25% of companies feel really good about how they're producing their corporate reports. So when you think about these things and you evaluate your organization, do you have an increase in those regulatory reporting requirements or desire to streamline your close process? Do you need a single source for your financial and non-financial information? Do you need insight to the real-time status of your close and a means of reviewing that performance to improve throughout the close process? Do you need better visibility or better control? These are questions that I'm sure many of you think of on a regular basis. These are questions that Thayer Lodging thought of when we started to work with them back in May of last year. I think overall, most organizations have a lot of room for improvement in these areas. So moving from really the challenges to the solutions, I'm going to talk a little bit about the key components of a world-class close process. So here in this diagram, we have the full close process. You have your subsidiary ledger close, your GL close, data assurance, consolidation, et cetera, all the way through to your filing. And in a world-class close, there's a couple of things that really stand out. One is that you have task management and workflow that guide that entire process. So anybody from the organization should understand what the status is of each of these various phases throughout the close. And then within the tasks themselves, there's automation, right? There's processes that are being implemented that are speeding up the close process, because ultimately the goal is to complete an accurate close, to do one that's timely, and to consistently improve. And if you have a timely close, if you can finish faster, then you're going to have more time for what's important, which is analyzing the financial data. Some key items about moving to a world-class close, things that are really important to look for, things that we're going to talk about with Thayer Lodging are eliminating duplicate and inefficient efforts, automating manual processes, really improving visibility into the status of the close overall, and having a shift to self-service reporting. And if you can accomplish these things as you look to improve your close process, then it's going to result in really time savings, which is the most important thing, or one of the most important things when it comes to the financial close process. So I've seen closes that range in variety from 5 or 6 days all the way up to 12 to 15 days. And when I say 12 to 15 days, that's business days. So some organizations have a close that can go 2 to 3 weeks or even longer on quarter ends, and especially on year ends. And the goal would be to get away from that and really get to a place where your close is taking 6 days, as an example. And that gives you more time to analyze and forecast, more time to look ahead, and more time to make decisions that are really going to drive your business forward. So the key is to figure out ways to still be accurate and still provide visibility and still have a complete close, but do it in less time. I'm going to show you some ways that you can accomplish that today. Before we jump in and talk a little bit more specifically about Thayer Lodging, I want to talk about FCCS, or Oracle's Financial Consolidation and Close Cloud, just to level set what the technology is and why Thayer made the decision to go in that direction. So Oracle, they've been working with this close consolidation space for the last 30 years, and it started with microcontrol back in the 80s and then shifted over to Hyperion Enterprise and Hyperion Financial Management, all of which were on-premise applications. And they've taken that knowledge and experiences and best practices, and they've rolled it into a solution called Financial Consolidation and Close Cloud, which is that same solution or that same technology, but in the cloud. So a lot of experience has gone into creating the product. When you look at this product overall, it brings you a best practice out-of-the-box consolidation solution. What that means is that it has a best practice approach built in for consolidations, including things like your translations, intercompany, dollar value overrides, and other calculations. And when I say that it's built in, what that means is that with Hyperion Financial Management as an example, or other on-premise solutions, you may need to build out that technology or that functionality with calculations. They need to be created. Whereas in this case, within FCCS, they are created for you. There are forms that you can use, there are calculations that you can use that are guiding your consolidation process, that are helping you save time by really guiding you through that process. And those tools, those calculations were built with the knowledge and experience that Oracle has had working with their clients and customers over the course of the last 30 years. It also supports multiple reporting needs. So that ability, like that as Thayer needs to report on GAAP or IFRS or other reporting requirements, reporting standards, that's all built into the tool. And it also can support improving speed and accuracy of the financial close process. FCCS also comprehensively addresses the extended close process. So I showed you the diagram that showed the subsidiary ledger close and all the various components that make up the close all the way through to your filing. So you have account reconciliations and data assurance, your consolidations, and you do have that situation where there are potentially thousands of tasks. And FCCS comes with a tool that used to be called Close Manager on-premise, but it's built into the system. It has dashboarding, and what it allows you to do is to track the status of as many closed tasks as you need to put into the solution. So that we have some recommendations about how you can get started with something like that. I'll talk about that with Thayer specifically, but it gives you the ability to manage the extended close process from end to end, and it gives you dashboards to see the status. And what's nice about the dashboards is if there's an issue with the close, if there's something that's holding up the process, you can identify those late tasks. You can understand what the problem is with the information that's stored in the system, and then you can work to eliminate that problem going forward. So you can save time ultimately. And then finally, it's integrated, it's secure, and it's auditable. FCCS allows you to access it from a phone, from a tablet, from a computer. It's always up to date. And when I say always up to date, it doesn't just mean that the data is up to date. You're going to have that access to real-time information from a variety of sources, but it also means that the software is always up to date. So on a monthly basis, Oracle is going to push software updates to FCCS in the cloud, which is going to reduce the need to get IT involved in regular software updates as you would need to do for other on-premise applications. A lot of times we see with our clients that you'll have a situation where maybe your version of Windows needs to change on your servers. And then when that version of Windows needs to change on your servers, you need to address every piece of software that you have on your servers, which includes on-premise applications. That type of issue that requires that sort of scramble to upgrade or to update the software, with FCCS that goes away because you're getting those updates on a regular basis and Oracle is staying ahead of any of those types of issues. And just to put a wrapper on the FCCS really functionality component and talking about what's there, you have predefined dimensions with built-in financial intelligence. What that means is that there are built-in KPIs and statistics. So you don't have to create every calculation. It's going to give you a bunch of calculations and a number of things that you can use. You have pre-built forms and reports. Your standard P&L and balance sheet are going to be built off of those predefined dimensions. You have consolidations, eliminations. All the key components of a consolidation engine are built into FCCS. And then in addition to that, you have the task management and workflow tool, which includes a close calendar. So if you want to view where you stand with the close, you can do it in a calendar view or a Gantt view or many different views. And supplemental schedules are also included. So you can really report on non-financial data in addition to your financial data within this solution. And there's really a portal that you can use to do that. And then finally, the dashboards are really the wrapper on everything. Every one of these various components to the application has dashboards, which allow you to see visually how the application is functioning, your data, and different pieces of information about the system. All right, so now that I've covered FCCS in detail, let's jump into the important stuff here, which is the success story. Let's talk about Thayer and really what they did, how they revamped their close process, and the story behind that success. So who is Thayer Lodging? Thayer is a leading global hospitality and investment company, and their goal is to be the world's premier private equity hotel investment firm. In order to get to this point, what they've done is establish relationships with brands like Marriott, Hilton, Starwood, and Hyatt. The hotel in the background is a hotel that they own, and it's the Hilton Los Cabos Beach and Golf Resort. And it's a beautiful resort, as you can see. What they do is they'll take a property like this one and they'll purchase it. They buy it with a series of funds that they raise money for, and then they will improve the operations. They'll make capital investments. They'll ultimately increase the value of the firm or the hotel, and then they'll sell it for a profit. And that's really their goal. And at any given time, they can own really hundreds of hotels. So they're doing this repeatedly, which creates some of the challenges they have from a close perspective. So before the transformation, there were several, just a little bit more background about Thayer, and then I'll talk about some of the challenges, but they're a growing company. So usually their portfolio of hotels is growing at a pretty consistent basis. The hotel pictured in the screen is the Diplomat down in Fort Lauderdale. Actually, I believe it's in Hollywood, Florida, and they purchased this hotel back, I believe, in 2015. So this is one of their many properties. You also saw the Los Cabos Beach and Golf Resort, but on any given day, week, month, etc., they can have a new hotel come into their portfolio, and they need to report accurately on the information from that hotel. Their existing financial systems are inflexible. Systems might be a little bit of a strong term to describe what they were dealing with initially, because they were really using Excel for a ton of their financial reporting. I'll talk a little bit more about where that created some challenges for them. It was very difficult to produce seamless reports across their entire portfolio of hotels and funds. And then finally, this piece is really important to understand. They needed an application that could serve two purposes. One is their consolidated reporting, and the other is their detailed hotel level reporting. So if you think of a business like Thayer's, they have the private equity side, the fund side, where they're collecting money from investors, and then they're using those funds that they're collecting into several different entities and some unique structures to then go out and wrap up the fund, create the fund, and then purchase hotels. And then once they purchase that hotel, they need to start reporting on the operational side of the hotel. So it's really a completely different side of the business. On the operational side, they need to report on things like RevPAR, revenue per available room, occupancy rates, conference revenue, all the things that would come along with owning and operating a hotel. They need to do that accurately as well. So they have some uniqueness in the business that makes their financial close and reporting process a challenge. Some of their key financial close process challenges include a number of the things listed here. They were executing their financial close and consolidation and related reporting processes via manual and spreadsheet-centric processes. So they were really in Excel hell when we met with them for the first time in May of 2016. And I'll explain a little bit more detail about what that looked like, but I'm sure everyone on the call has seen those 100-tab spreadsheets where everything is linked between various tabs, and when you want to trace a number back from a report, it gets very difficult to trace back and forward throughout the reporting process. And as a result of this manual and Excel-based process, the close process took too long to complete, and quarter and year-end closes were more painful. So they, as that close process would drag on and become longer, they'd have difficulty meeting reporting and audit deadlines. And obviously that sort of starts to snowball. It becomes a challenge for the organization overall. Also, the manual work, the Excel spreadsheets created excessive rework, reconciliation, and review. You can imagine that when you're going to produce a board package, when you're going to produce something, Thayer is actually owned by another private equity firm. So when you're submitting that information, you got to double, triple, quadruple check that information. It becomes a big challenge to get the financial reports out the door. And then some additional challenges. Their entity structure includes over 150 entities with intercompany challenges and partial ownership considerations throughout. And that entity total of 150 actually changes. It grows and shrinks pretty regularly with the addition and the sale of hotels. So that entity total and the way that they account for those entities needs to be fluid in any application that they're going to implement. It's the availability and granularity data is limited and burdensome to collect. It's a really hard thing for them to do detailed analysis on their data. So if you think about a hotel, and you think about 10 hotels or 50 hotels or 100 hotels, when you want to compare something like RevPAR across all of those hotels, how do you do it if you're using Excel and you have a lot of manual processes? They have numerous manual handoff points of data and reports. And overall, this is one of the overarching issues, there's a lack of visibility and control into consolidated data and adjustments. When somebody would go to the controller, Mike Zink at Thayer, and say to him, hey, I need to understand what this line is made up of on our P&L. I need to understand why this changed by X percentage from month 1 to month 2. It became very difficult for him to be able to do that with the Excel workbooks and the manual processes that they were using. From a data flow perspective, This, I would say, is a extremely oversimplified version of what Thayer was dealing with on a regular basis. So on the left side, we have the lessee ERPs, ERP 1, 2, and 3. Those are the hotel ERPs. So you can imagine instead of 3 of these, there are 100 or 150 of these that need to get into their Excel financial report build-up files. In addition to that, they're all on different systems. They're all on different charts of accounts. Really, what Thayer is getting is a TextPad file that could be formatted differently for every one of these companies. And on any given day, week, or month, they could be adding more or taking some away from this list. So it's consistently changing. That data then flows into Excel files, Excel financial report build-up files, where they're tracking that key information like RevPAR and occupancy and trying to manage and support the management of those hotels. Across the top of the screen, they were using QuickBooks for their lessor ERPs. The lessor and their corporate books were all in QuickBooks. They had 100 separate logins and separate instances of QuickBooks. They weren't all necessarily on the same version, depending on when they may have had acquisitions or different things happen within the organization, like that type of change. And it became very, very cumbersome to use QuickBooks as a means to produce their really as their primary ERP system for the collection of their transactions at the corporate level. From QuickBooks, they would extract the data and manually push it into these Excel financial report buildups. And then you can imagine how the volume of tabs in these spreadsheets would grow and grow and grow. They also would layer in manual and miscellaneous data adjustments into those Excel financial report buildups, eventually getting to these tabs, these summary tabs that were their Excel financial reports. So when you think about this overall, a very challenging process, a process that would be difficult to audit and create a lot of challenges for the business. All right. Now, moving forward, we'll talk about the solution. How did they get from that challenge, that data flow diagram that we just showed, to a world-class close solution? These are some of the key items that we highlighted earlier in the webinar. So they want to eliminate duplicate and inefficient efforts. You can imagine how inefficient it is to live in that Excel world. They want automation, right? They want to consolidate their related activities and information to one place, to one system, right? Overall, improve visibility, improve the control of the close process from end to end. They got to get to this from where they were, and ultimately they made the decision to use software and to work with our team and with Oracle to do it. When we talk about their solution, they had really 2 key requirements. I have 7 listed here. When we met with Mike Zink, we came up with these 7 as we developed our project charter and just our key project items that we wanted to focus on. But if he had 2 that he would highlight above all others, they are the first 2 on this list: reducing the time to close and enhancing visibility and control. Their average time to close on a regular month, if you eliminate quarter end and year end, was 12 business days. And they needed to reduce that time, especially because they have some uniqueness in the way that they do their close. Thayer actually closes twice during the month. They have a forecasted close that's sort of like a shorter close. It's more of a 6 to 10 day close where they look at half of a month of actuals and half of a month of forecast and try to identify what the close is going to look like. And then they repeat that process for the full month end close that can take anywhere from 12 to 15 business days, usually around 12 during a standard month end. So they had to get that time down. And that way, Mike Zink, the VP and corporate controller, his team, they could spend that time doing more meaningful activities. They also needed to enhance visibility and control. I think it's really clear how much they struggled with visibility and control using all of those manual processes and Excel spreadsheets to manage their end-to-end close process. They need to comply with global accounting standards. Of course, that's important. They wanted a cloud-based application. This was very important because Thayer, again, is owned by another private equity firm. A lot of their servers that they used to house on site in Annapolis, Maryland, they don't house those servers anymore. A lot of that IT, that support has moved to the parent company's offices. So in order to get a big project that's an on-premise project with servers, with the spend on IT, in order to get something like that funded and approved would have proven very difficult. And Mike also had a desire to really get something that was accessible from anywhere, where they didn't have to work with IT and deal with that side of the business in order to get this done and get moving forward in the right direction for the accounting and finance teams. Mike wanted a rapid implementation. I think anybody who's dealing with sort of the challenges that he was dealing with on a regular basis would want to move quickly and get out of that world. he wanted the solution to be owned by finance and accounting. And I hit on this, but again, he wanted something that was his and not something that was owned and operated by somebody else that he just used on a day-to-day basis. And then finally, he wanted a minimal IT investment. So with FCCS, with ERP Cloud, he was able to accomplish these key requirements, and he was able to do it with a subscription-based model that prevented him from having to spend significantly on capital investments from an IT perspective. When we first met with Mike back in May, he wasn't sure what he was going to do from a solution standpoint. Mike was familiar with Oracle products. He had used Hyperion Planning and HFM in a previous role. He had also used a non-Oracle ERP. I believe it was, I'm drawing a blank right now on the name of the ERP system that he was using previously, but it was a non-Oracle ERP system. He also had worked at PwC. He was an auditor for a number of years. So he had seen a lot of different systems. He knew that there was a lot to offer. So when he was looking, he wanted to do his due diligence, and he actually looked at about 5 EPM options and 5 ERP options, ultimately narrowing down those 5 to a top 3 in each category. And he looked at Tidemark and Host Analytics and ultimately made the decision to go with Oracle FCCS, Financial Consolidation and Closed Cloud Service. He also looked at NetSuite and Intact and made the decision to go with Oracle ERP Cloud Financials. So the reason for those is with Tidemark and Host Analytics specifically, they didn't meet every one of his requirements. Due to the complexity of his business, he needed something that was going to be flexible when it came for his methodologies of dealing with some of the complex equity that he dealt with on a regular basis with his entities. FCCS gave him that flexibility. He also wanted automated GL feeds. So whatever ERP he selected, he wanted to be able to get that data into his financial consolidation and close tool on an automated fashion. That was a big ask of him with the project. For ERP, he looked at NetSuite, he looked at Intact, and he looked at Oracle ERP Cloud. When he looked at NetSuite and Intact, he received pricing that was by entity, which was a big challenge for him, for his company to bite the bullet on. It was difficult for them to go down that path. And ultimately, with ERP Cloud, he knew that he would have those seamless data integrations between Oracle Financial Consolidation and Closed Cloud Service and Oracle ERP Cloud Financials. So we covered in detail what the financial consolidation and closed cloud service looks like, what you get with that, the closing consolidation, the process and workflow, the integrations, the dashboards. But I do want to spend a minute and talk a little bit more about Oracle ERP Cloud Financials. Again, the focus of this webinar has really been on the FCCS side, but they also implemented Oracle ERP Cloud Financials. And for that implementation, they had 4 modules implemented. They implemented the GL module, the AP module, the fixed assets module, and the cash management module. For their users, it's instead of having QuickBooks and Excel, now they have this Oracle interface that looks and feels the same across both the ERP and EPM cloud platforms. So that familiarity is there. They get the dashboarding, the reporting, all of those things. And there was also easy integrations between the two. They could also, with ERP Cloud Financials, add, if they need to, an AR module or a procurement module or other modules to what's available for ERP Cloud Financials. So it gave them flexibility as the business grows on the ERP side to add things to this process. Right? So a good example of how this works for there, if you think about them, they have a lot of fixed asset spends because they're making capital investments in their hotels on a regular basis. So with the combined implementation of ERP and EPM Cloud, they invest in a hotel, they make that capital investment. Maybe they need to buy new TVs for every room or do construction in the hotel somewhere and they make a capital investment. Well, the invoices for that are going to flow through the ERP system. They can scan the invoices and the information automatically pops up in their AP module. They can get the AP invoices approved, and then that AP detail flows through to the fixed assets module. And it all happens on an automated basis based on the timing of things that are run in the background of the system. And then once that fixed asset item exists in the system, they can reconcile that data to their bank accounts in cash management. And ultimately, all of the entries associated with that fixed asset roll up into the general ledger module. So now they have that complete picture in their ERP of that fixed asset spend for an individual hotel or an individual project. And then as you get from the ERP system over to FCCS, You can produce a trial balance out of the ERP to review it if you need to. You can run reports. You have all that available, but also we have a direct integration of that trial balance from the ERP system over to FCCS. Mike wanted it to happen 3 times a day. That's the pace at which that integration is happening. And then he can get his consolidated financial reporting out of FCCS. So I'm going to show you a little bit more about what that looks like in a data flow diagram here in a minute. But first, let's talk about timeline. What did the timeline look like for Thayer? We touched on some of the early timeline items. We started in May of 2016. That's when Mike reached out to us. We started having conversations about products, having some discussions about some of the challenges he was facing him, connecting with some of our other clients. He researched the closed consolidation and ERP applications. He narrowed down his selection, he made his choice, and we talked about that in a little bit of detail. And then in June, he selected SC&H as an implementation partner. We developed our project charter, set forth those key requirements, those goals for the project overall, and kicked off a combined ERP Cloud and FCCS project in July. So our timeline was tight. You're looking at a July start and an October go live across both ERP Cloud and EPM Cloud. We held requirements and design sessions. We began to build the applications, again, continuing through July. And then in August, we really got through the build of FCCS. So the build of FCCS was about a 6-week project, but we held off on the go live for a few reasons. The biggest of which is that it was important to Mike that we align the go live for the ERP and the FCCS projects. So we held off on going live with FCCS until we could create those automated feeds and really get him that complete revamp of his close process across the 2 solutions in parallel. So in August, we continued the build and test phases for ERP Cloud Financials. In October, we had our FCCS and our ERP Cloud Financials applications go live and really completed that full close transformation for Mike. So that's the way that the project timeline looks overall. And over to the data flows. This was that before data flow diagram that I showed you where you have countless hotel ERPs rolling in. You have the QuickBooks ERPs with all the information coming from corporate, from all their funds. You have the Excel financial report buildup, all the data and adjustments, a lack of visibility, a lack of control. This is what it looked like before. And then this is the data flow diagram after the transformation. So the 2 items in red in the center of the screen, that's our ERP Cloud Financials and our Oracle FCCS applications. The lessee ERPs, the hotel ERPs are still going to remain. They're always going to be there. They're always going to be sort of interchanging. They're always going to be coming on and off based on the purchase and sale of the hotels. But now they have a tool called FDMEE, Financial Data Quality Management Enterprise Edition. And that FDMEE tool allows them to load that data regularly, load it with an automated routine that loads the data into Oracle FCCS, and they can do that every day during their close or whenever they receive files from the hotels. They have that ability to get the data into Oracle FCCS from a hotel perspective, from that side of the business in a much easier way. Then on the ERP Cloud Financials side, they used to have countless instances of QuickBooks. It was a huge challenge and a burden to manage all the QuickBooks instances. And across the QuickBooks instances, they were outdated. They needed to be updated. Now they have one place, a single login where they go in and they can see all the information with all their entities in that single instance. With security, you can limit who sees what entities, who has access to what information. You have all those capabilities, but in a single tool. And then out of the ERP Cloud Financials, they can report on their fixed assets, their accounts payable. They can report their trial balances. They can run reports. Out of FCCS, they can get their consolidated financials. I've been asked the question a few times, and we talked to Mike about this. Why not just go with ERP and just do one side or just do the other? And there were challenges on both sides of the business for Mike, but the biggest thing is that he couldn't put all this into ERP Cloud. Some organizations will do a consolidation in ERP Cloud for a few reasons. One was because of the complexity of his consolidations. He needed additional complexity built into the consolidation logic. And 2, and really the biggest reason, is because his hotels, the hotels that they own for a period of time and then they sell. They can't incorporate all of that detail, all of that transactional information into their GL system. The hotels own and operate their own GLs. They're always going to own and operate their own GLs. Mike, for consolidated financials, he needs to produce financial reports and he needs that summary trial balance information from the hotels. And using FDM, he can load that data directly to FCCS. He can bypass ERP Cloud Financials and still get his financial reports produced. So ultimately, a much cleaner data flow, a much better looking process overall. And the critical improvements, again, task management workflow, you have that simplified data flow, better control, a single source of the truth. Rather than all of these Excel spreadsheets, he can go to one place that's really his source of the truth for his financial information. There's no manual intervention. Nobody can go in and just enter information. They have journal entries and controls in place that make this a much better environment to perform the close. And you get seamless reporting across both systems. So significant improvement overall. Now, if you think about project results, we had these goals initially. Some of the key requirements initially were to reduce the time to close, to have better visibility, to have a rapid deployment, a cloud product. We were able to accomplish all these things throughout the course of the project. Reducing the dependency on Excel, eliminating risk. Overall, these goals were easily accomplished with the implementation of these products, especially when you consider what Mike was dealing with from a process perspective and Thayer was dealing with prior to the implementation. And if we look at this another way, that's really the biggest thing that Mike saved over the course of this implementation and the project was time. The average close prior was 12 business days. They've got it down to 6 business days. So that dual close that they do, the uniqueness of the way they close their books isn't as impactful. It gives them more time for analysis, more time for budgeting and forecasting, and the real value add activities that they need to get to beyond the close. Before they had a lack of control, they had a ton of manual processes. Now they have excellent controls and they have automated processes. So consistent improvement in these categories as we work down this page. Before they didn't have visibility into the close, but now they have a constant understanding of the close status. So I want to highlight this point specifically. I haven't covered this really yet, but with that workflow capability, that task management capability that's part of FCCS, you can choose, if you want to put 1,000 tasks into the task flow and manage every single task in your close process. And the recommendation that we made to Mike and to his team at Thayer was, let's start with the corporate accounting team. Let's create tasks that are really high-level summary tasks that we can manage during the close process, and then build on that foundational start of using Close Manager to add to it some important maybe bottlenecks or areas where you can start to view and resolve issues that are slowing down the close process. So we didn't put everything in. We put a small foundational starting point in for him and his team. They were able to go and build on that starting foundation and now use that task management in a more detailed and a better way across the organization. So still a better understanding of the close status. He can still go into the dashboards, review them, and understand where he stands on any given day during the close. And for that matter, if somebody has a question about it, if they have access to the application, they can go in and they can look for themselves and understand exactly where the close stands. Before, they had a complete dependency on Excel, and now they use it for what everybody likes to use Excel for, which is ad hoc analysis. They have canned financial reports that are consistently run, that they produce out of the system, and then they can go and they can drill down on the numbers and play in Excel when they want to use the ad hoc features there. For those that aren't familiar with ERP Cloud, you also have that ad hoc capability out of the ERP system as well. So for the users, it was really easy to get used to both tools at the same time because of some of that synchronicity across the two. Before, they had manual data integrations. All this information was coming into Excel. Now they're seamless, they're automated, they run 3 times a day. Mike's hotel files are loaded through FDM. They have that mapping process there. It's a really clean process that they use on a monthly basis. You have that consistent system-driven reporting that I mentioned. From a systems perspective, they don't require those regular updates anymore. They don't have to worry about the version of Windows on a server. They don't have to worry about the version of Excel or Outlook that they're using when it comes to add-ins. They have those upgrades are going to hit FCCS on a regular basis. They're automatic, and Mike no longer has to worry about that piece of the puzzle when it comes to his close. And then finally, there were IT and capital investment resources were concerned prior to the project. There's really a minimal IT investment required to get to what they need to get to. They pay a licensing fee on a monthly basis for the solutions, but there's not that upfront capital investment like there would be with an on-premise solution. And finally, looking forward, when we've had conversations with Mike about what's next, the maturity level of his organization when it comes to using these tools is getting very high. I mean, they've been live for just over a year now. We got through FCCS and ERP Cloud Financials. They have an in-house tool that they use for planning. So there's certainly options there for them to use PBCS as an example. And if they go with Oracle Planning and Budgeting Cloud Service, they can integrate data in the same fashion over to that tool. They can create automated integrations. They can take advantage of the workflow capabilities in FCCS to look at their forecast and budgeting process as well. Or maybe tax provision is another option. Now that these cloud services are sort of coming out rapidly from Oracle, you have other options that you can use, and you can really start to build on the foundation that he's created with ERP Cloud and FCCS. So he's got a really good starting point, has seen a lot of advantages to what he's done, and now he ultimately, going forward, can create a plan to continuously improve that whole and extended financial close process. Right. So hopefully that's a really good overview of Thayer, how they utilize the solutions, FCCS and ERP Cloud. I'm going to turn it over to Colin here in a second to see if there's any questions that have come through that we can answer for you. And if there are any questions beyond what we answered today on the call, don't hesitate to reach out to me directly. My email address, my cell phone number here on the screen, and we'll send out, again, a link to the webinar and the slide deck in a couple of days as well, so you have that information at your disposal.
All right, great, Kevin. Well, we have a handful of questions here, so what we're going to do is we're going to get started here right at the top. One of the first ones that came in was, can you move data between an on-premise closed solution and an Oracle Cloud solution?
Yeah, absolutely. So this comes up a lot. This is a common question. Can I have maybe a part of my financial close process or my budgeting and forecasting process in the cloud and a part of it on-premise? Where we typically see this is some organizations may have very strict IT regulations when it comes to the financial close, but when it comes to budgeting and forecasting, it's the wild, wild west, and they can do whatever they want. So we do see regularly with companies where they may maintain an on-premise financial close application and then have that planning and budgeting application in the cloud, but you do need that final financial close data to move to the cloud. And with the Oracle Cloud Solutions, there's a tool, it's called EPM Automate. It allows you to easily set up those integrations where you can take the data from an on-premise solution and you can load it up to the cloud. And it's secure in the way that it needs to be to protect the financial information of a company.
Awesome. All right, the next one we have up here is, what if the automatic patch update happens during critical weeks like parallel test or go live or during the month-end close? You don't want the system to change during the critical weeks.
Sure. So the way that Oracle rolls the updates into these applications is that there are 2 dates each month that are important. The first one is the first Friday of a month. On the first Friday of a month, the update is going to hit your development application, so you can see the change. So really what's unique about it is that every company that is on FCCS, as an example, is going to get that update on the same day into their development environment. So while it's prudent to do testing, to go check your financials, to look at the data in that development environment, every company around the world that has SCCS is going to do the same thing. They're going to report any issues that they see back to Oracle. And if there are any issues that are going to create a problem for anybody, Oracle's not going to push that same change to production. The production changes go in on the 3rd Friday of each month. The reason for the 3rd Friday is typically that's going to be beyond the close. It's going to be beyond the close cycle. It's going to be in a more low usability period in the production applications. But if you as an organization really don't need the change, or you don't want the change, maybe you're in a critical year-end deadline, maybe there's a different reason or an update that you read about that Oracle provided that you don't want in your application, you can open a ticket with Oracle support and you can have that change pushed back, that update pushed back until a later date. So there's some flexibility there, but we really haven't seen a lot of issues with our clients getting those updates. And again, there's a README that comes out before that first Friday of the month, before the update hits the dev environment, that provides all the information about what's changing. So Oracle, I think with FCCS, the product is still relatively new. Thayer was the first customer live on FCCS back in October. The product, I think, was released in May of last year. They really don't have major updates coming out regularly. It's minor updates for the most part every month, and then maybe once or twice a year. And again, FCCS is a relatively new product, but rarely they'll have that more significant update where it's really prudent to get in there and test it and make sure that everything's okay.
Great. Well, good transition here. talk about Thayer Lodgings. Did they have any difficulties finding FCCS customer references to support their decision, given the early stages at which they adopted the technology?
Sure, yeah. When Thayer, being that they were the first customer to go live, there were some other customers that had purchased FCCS at the time. But between our team and our experience with Oracle, working with HFM, and also the Oracle product development team, we were able to get Thayer very comfortable with the solution. So one of the big advantages that we have as a practice that we had working with Thayer is that the folks in Oracle, whether it's Rich Wilkie, who's the head of product development for all the closed consolidation solutions at Oracle, or Maggie Reed or Rajesh, some of their team members, we had them at our disposal so we could really talk to them about any issues that we were seeing, any challenges with the product, and that really still exists today. So, the product's 1.5 years in, it's maturing, they're getting very close to full parity with HFM. A lot of recent releases have closed any of the gaps that still remain, but they're more than willing to jump on a call to help out resources, to talk to folks about the product and make sure that everybody can get comfort with the fact that even though it's a new product, it'll meet your needs and be able to accomplish the goals that you set out to accomplish.
Great. All right, next one we have, how many lessee ERPs were integrated with FCCS using FDMEE?
Sure, so that number has grown since the implementation. There are instances where those lessee ERPs are the hotel ERPs. There are instances where multiple hotels can be on the same ERP. That's a little bit rare. But when we were on the project team, it was in the realm of 50 to 75, and that number's grown and is likely up around 100 now. So it's a lot of integrations in there, but some of them are pretty simple files, and we've created automation around that process. So once Mike gets that lessee ERP information, which is really for Mike Zink and Thayer a text file, because he doesn't own the ERP systems for the hotels, they remain owned and operated by the hotels. He can take those consistently provided flat files and put them into a folder, and FCCS and FDMEE can grab them and load them into the system.
Great. Next one here is how did we resolve historical data reconciliation issues within the 6 weeks of the FCCS implementation?
Sure, this is a great question. And what we did, so knowing that our timeline was going to be extremely tight for the implementation, there's always going to be things that we can and cannot accomplish in that 6-week time period. So what we did is we reconciled, it was in October of 16 that they went live. We reconciled full year financials for 16 and December 15 balances. And then Mike and his team were responsible for going back and reconciling prior years. So beyond the go live of the project, they took that time to bring in their financial information year by year into FCCS, and where they needed support, where they had questions, we were available, but ultimately they were able to do that themselves. Typically when we do one of these implementations, especially the rapid implementations, we're very cognizant of the fact that very quickly the company is going to be required to do this on their own. Our goal is not to stay out there forever. It's to get them up to speed with the product, to teach them what they need to know, and then to get out so they can move forward with that closed process on their own. And one of the ways that we do that during our projects is, especially in a project that's a rapid implementation, is that as soon as humanly possible, we have the team that's going to be the user group sitting on calls, sitting on conference calls, sitting in the room with us, and looking at and learning how to use the product. So it's hands-on, it's real-time, and we get them in there as soon as possible. And that really helps with the transition, especially on a project this quickly, to get them reconciling data and to get them comfortable with the data in the application.
Great. Next one here is, how many total tasks is Thayer monitoring currently in the task manager?
Sure. So when we started, again, this has to do with the idea of a rapid implementation as well. We weren't going to incorporate every one of their tasks. We also wouldn't recommend that you go down that path. And I spoke to this during the webinar. Thayer, initially, we put about 20 tasks into the application, and then we had a handoff to the primary group, the core users of the application that work on the corporate accounting team, to show them how we created the tasks, how we created the schedules, the templates, and how they can go through and add tasks to that. Now they're, I think, in the 50 to 75 task range. I've seen as many as 200, 250 tasks, and I've seen as few as 10 or 15 primary tasks. So it really just depends on the organization. I think there's probably a sweet spot there that gives you the visibility into where the close may be getting bogged down or slowing down, and really that useful information and having too much information in the tool.
All right, last one here, and then Kevin will reach out directly to anyone whose question wasn't answered. Are the local sites and hotels for Thayer leveraging the task manager as well to manage their local close processes?
They are not. In this case, because Thayer is, they're owning the hotel, they're operating the hotel, but the hotel is maintaining their own ERP system. The hotels are using their in-house systems to really manage their individual hotel close process. So they have their own ERP system or close system for that purpose. And Thayer, again, they're purchasing a hotel and then selling it. So they're not going to bring a hotel into their financial close tool for the full close because of that. What they're doing instead is they're taking the key data, key statistics, key operational metrics that help them manage the hotel. They're bringing that information in via trial balances. They're loading that into FCCS, and then they're reporting on those financials. But they don't have the tasks going down to the hotel level. Now, what they could do is if they had the appetite to extend user access, they could have tasks in FCCS where hotel users would need to go in and identify that they've completed a task, or they could link to an ancillary system, a non-Oracle system inside of the task. So they're required to go in, click the link, go into the system, maybe do an account rec or some type of reconciliation in their system, their non-Oracle system, and then come back to Oracle and represent that task has been completed. So there's options there of what they can do.
All right, great. Well, we're going to follow up directly with everyone. There's a couple other questions that we're going to follow up directly on, but we really appreciate everyone's time today and attending today's webinar. We are going to be sending out this final recorded webinar, so please be on the lookout for that in the next few days. We're going to make sure we get that over to you before the Thanksgiving holiday. Again, we really appreciate everyone's time today. Have a great rest of your Thursday, and we'll be on the lookout for more webinars to come here into 2018 from the SC&H Group team. Thanks a lot for your time today, Kevin, and thanks for everyone for joining.
Thank you.